Hey guys, I'm making this video for the purposes of a purely analysis of looking into Wyckoff price cycle. We're using a 2020 hindsight. This has already happened. We've been in a distribution phase where there was a lot of talk about it in on the social media. There was, rumors were out there. Hey, we've seen a distribution aspect face of it, a good example of a textbook being used in BTC. The insiders, moneymakers, have been manipulating this price action and playing with people's emotions, right? So let's go back in time and see just a synopsis of what Wyckoff theory actually is. The Wyckoff theory just helps us to understand and anticipate a good analysis, a thorough analysis of a supply and analysis. Um, that's what Wyckoff is all about. Volume price action. It's a volume price analysis. You're looking at the demand and the supply. When you have a good indicate understanding of a Wyckoff, you could use this in an hourly chart. You can use this in daily chart. You can use it in a minute chart. So Wyckoff theory plays itself all the time. I like using Wyckoff theory in the 4 hourly chart and the daily chart. So what I did is I especially drew this in the 4 hourly chart, and then I zoomed out and I see it if that transpired into the daily part of it. Yes, just forget about this part, don't look at this right now, I'll come back to that. We've visited this distribution phase when we started seeing our all-time highs from going to all-time high of February, which was early, like all-time high in February was like 40s, from 30s to 40s, and it kept price kept on going high, and we started seeing 50s. And when we hit our all-time high, approximately I think it was 64, 62,000 somewhere there in BTC. So I'm just using the Wyckoff theory to show you guys how actually it's playing itself again, and we need to pay attention to that. Wyckoff theory is just, like I said, an explanation of the demand and supply. When you are in your distribution area, right here, we were in our distribution area. It was a good indication that it was in an overbought phase. You can tell that from your RSI. You can go back to your RSI and look at your RSI and visit every peak, almost every time the uh, Bitcoin peaked, and you see that it hit the 70, and that was a good level or range a lot of people used like to follow and know that I understand the RSI and know, okay, now it is in an overbought place. It's for me, it's time for me to actually take my profits, and just be on the sidelines, or maybe take some percentage out and keep following the uptrend, so that you profiting as the prices keeps making higher highs. And another place is looking at the RSI part of it, is looking from the oversold, and which is in our accumulation. You can see the RSI shows you and a good indication this is where you actually want to put in your buys, and also be considerate or making your stop losses, right? You just don't want to be uh, following this blindly, so you want to also make sure that you put your stop losses and start scalping. Most likely, I mean, a lot of people use it, the RSI, for scalping. I use it for scalping. It helps me to see when it's overbought and oversold, and start taking my profits. So let's go back to the Wyckoff theory. Wyckoff theory, in the distribution phase, this is the preliminary supply, the PSY. This is where you have large interests that begin to unload shares, and they start selling it in high quantity. And you can see in also there was that an upward movement, upward impulse momentum, and insiders pushing the price higher, speculators joining in, forming in, and nobody wants to be left out. We see a lot of commercial and non-commercial and institutions actually coming in and supporting this upward momentum. We have another thing that's called the buying climax. This is often known as when the prices increases, the volume also increases. So let's zoom this in. You could see your price action of your volume does represent itself really well. So you have an above average volume and you have a wider candlesticks. Your price action is making higher highs, wider price, wider volume, um, wider candlesticks, high above averaged volume that supports the uptrend. But there's also, you got to pay attention to some anomalies which actually play a huge role. It's a good indication to show you that the price action is not being supported when you see a wider candle and really low volume. So for example, we could find one example and I'll point it out to you guys. When you see that the price is actually moving higher highs, look at this one. You have a really high widespread candle, but the volume it's actually below, like really low volume. You you can find this this candle, another one example of it on another place, and you will see it has a different volume compared to it. So those are the kind of things that you want to pay attention to, is your candlesticks and at the same time to your volume. So we have an automatic reaction. This is where you see an impulse downward momentum when there's an intense buying substantially diminishing. It there was a lot of buying coming in and the price is pushing up, but you see that the buying momentum starting to decrease and is pushing the price uh, low, and we start making lower lows every time, and the price keeps going down, but it doesn't go all the way down. It's a good healthy pullback. We does create a testing range. All these excuse me, all these other lines that you see, the red lines, used to be a support one time, and now they are resistance. And so we had a testing range. It came down and it created this range that proved itself to be in a distribution phase. Um, so that we have this an automatic reaction. Another one is the secondary test, and this is where the price revisits the buying climax. So it tries to push the prices higher highs and see how much people are actually wanting to, follow. So the insiders are not playing a role here. So you can see that the supply, it's being outweighed by the demand. The volume and the spread should also decrease as price approaches the resistance area of the buying climax. Um, if look at it, you see a lot of people following in, and we don't see much support coming in from the insiders. There's not huge um, volume price action that's following or trending with these price candles or the price actions. They are making higher highs, but the candles, you can see, they are not widespread candles. They're really like really small spread candles with really low volume. This is a good indication that it's not the insiders are not playing in this game. It's the speculators and institutions, not huge institutions, but like really small institutions. And then we see a up thrust. This is where the up thrust is. It's a good place to actually uh, test the resistance zone and see how many people are wanting to, push the prices even higher than how it is. So one thing that you see here, it's a good example of a volume price action, is that you're looking at a small candle a not a wider candle, your candlestick, it's yes, the price action, the prices are making higher highs, but you do not have a wider candle. You have a really small candle, and look at your volume. You have a substantial averaged or almost above average volume that's wanting the prices to go even higher, but the candlestick shows it otherwise. So that is a good indication of paying attention to what's going on. That should be an alerting signal. Be like, oh, that's a red flag. We have a huge volume and a small candle pushing the prices higher, not be able to push it even higher. So that's where you need to start paying extra attention. And we have different names in different phases. So we can go back and see what these phases are. So we have a phase A and a phase B. Let me zoom out. We have a phase A, phase B, phase C, and phase D. And if you, I mean, you could Google, if you go ahead and just, go to any Google website and look at the distribution schematic of a Wyckoff event, you'll be able to see this and picture this really well with what I'm looking at right now and put it in front of your screen and see how that actually resembles it really well. But that's not the only thing you need to be doing. You also need to be looking at the volume and the price itself and compare and understand the cause and effect, supply and demand, right, and the cause of divergence. So phase A, it's a good place for distribution to go to a testing range. This was the testing range, and it marks the stopping of the prior uptrend. It's a good indication. Okay, so there was, yeah, it's a pullback. That's what all cryptocurrency does. It goes up, creates a higher high, pulls back down again, revisits a support, tests that support, and we have a upward momentum and a good. You gotta see a good follow through, breaking the higher highs. We had this testing range. We broke through. Bitcoin broke through it, but did Bitcoin through have a good follow through? Did it go all the way high, or was it just a fake out? It proved itself that was a stopping of an uptrend. So the demand has been dominant, and now the supply is entering the market, providing the preliminary supply. So let's go to phase B. Phase B, where you had the upthrust being tested on the buying climax. This is where it starts to build a cause for preparation for a new downtrend. This is the downtrend that's actually coming. So phase B even comes before phase E. So we are starting to build a downtrend, right? So there has to be a cause for the downtrend. The points about phase B in distribution, it is also similar to the points of phase B in accumulation, which we're going to talk about later. So it comes down and tests this supporting range. And we have a phase C. In phase C, it reveals itself by showing that there was an upthrust test again. It tests that again, and there was a large interest to mislead the public that is actually going to make higher highs, but it did not, and the price was pushed back down. There was an impulse downtrend, and aggressive traders started, coming in, and they saw this happening, and aggressive traders started taking, their positions, shorting positions, right? You can see that the Bitcoin has been riding this channel that I have here on an upward channel all this time. It also broke through that channel. That was a good indication for me to pay extra attention that, hey, Bitcoin is not being supported on an upward momentum. So another thing that is really particularly important note that I wanted to bring about. It's not about the Wyckoff itself. Was This is during the 12th of May when Elon Musk announced that he's not accepting Bitcoin no longer in Tesla, and you might want to ask yourself, did he see this coming? Did he see this happening and make it the perfect time to announce it to the public and start, you know, manipulating the market? So one thing you need to understand: manipulation is not doing, something from the market. Manipulation is just playing with people's emotions, and the fear and the greed is what pushes the prices either up or down. So we go back and see during the uh, distribution phase, is this is a pure example of a momentum that has already been driven into the market by the insiders. The candles and the volumes show itself. There was a natural buying by investors and speculators. In other words, the insiders were not pushing this price high. So you could see that there's a really low volume that's supporting or trying to push this price even higher highs. So this is the investors, speculators, and commercial people trying to push it. So the money makers are just sitting on the sidelines and just you know dump not I wouldn't call it dumping it, but selling it to people who are actually demanding, and the demand did not overweigh the supply, and you saw that happening. So now let's go to where we are today. And this is what I believe we are in. This is the phase we are in right now as we are looking at Bitcoin. It is definitely in its accumulation perspective. It's in the accumulation phase. That's what I build. This is my pure analysis saying that we are in the accumulation area. So now let's look at the accumulation area. It's the same thing as distribution, but the opposite. We have a preliminary supply where the prices substantial buying starts to begin, and after a prolonged downward from the previous distribution, volume starts to increase and the prices spread widens. So showing you there was a downward move, and this downward move, it's about to end. So we see there was, you could look at it, you see there's that huge sell off by the volume, and the candlesticks a good indication that it is supporting the downward momentum. But the very last one shows you that this was an anomaly. If you look at it, there was, yes, there was the downward momentum, and the candlesticks are wider candlesticks, above average candlesticks. But look at this guy. You have a really small candlestick right there, and you have a really huge above averaged volume. That's an anomaly. It doesn't play at all. It's a huge signal showing you otherwise, which it did prove itself to be. Um, a fake out to the shorters, and a lot of people getting actually liquidated, and now the price is comes back up, and it creates what it's called an automatic rally again, which occurs because of an intense selling pressure. It has greatly diminished, and you saw that happening with this price candle, and now it's pushing the wave. It goes higher. Now we do see that we have a range that's being developed, right? We have a potential range, which is the resistance zone, and a potential support zone where we've created as we've been in this accumulation period. This So we have also another secondary test. The prices keeps going down. It's being tested again one more time to push it even far below than that. We see that secondary test several times, and we are yet about to see it. Is this is happening again or not? Or is this price going to consolidate here for some time before the price keeps going up? So that's to come. And we are looking now at your secondary test in phase B. It's building a cause, the same thing it did on the upward trend. Phase B is just purely building a cause for a new uptrend. Institutions, large professionals, speculators, commercial, everybody is actually accumulating relatively at a low price, and they are putting this in their warehouse, right? Before we go back to a distribution phase again. So you see, you can hear a lot of actually negative news out there. One psychological impact is when the negative news is not being represented, it's not being shown in by the charts. That should be a red flag. So you hear people saying that it's going to go to 19,000, it's going to go to 20,000. I've even read somebody doing analysis saying that it's going to go to 20,000. Dude, that's a good red flag. Has this price been pushed all the way that far down? Probably not. If that did not take an effect, it's a red flag showing you that an accumulation is actually occurring. Another thing that tells you that this is an accumulation period is the volatility is actually decreasing. You can see we had a really high volatile movements in the early phases of an impulse downward momentum, and as time in, as time passed, we could see that there was a decrease in the volatility. So that tells me we are in accumulation period. So this is just for pure analysis. This is what I see it's happening. We've created a potential resistance zone. You can see that on daily. Let's go out to the daily. Um, yep. You see that it also, I drew this in the 4 hourly chart. It also looks really well on the daily, um, on our distribution phase right there. And also the same thing goes for the accumulation period. So have we seen our signs of strength? That is yet to come. I do not believe we have seen any signs of strength yet. We are just waiting for that, and the signs of strength is just a price advance, increasing spread and relatively higher volumes. So it often it takes or occurs after a spring has taken place. So have we been in our spring, or this is the spring to come, or this is the place we're going to say this is going to be a spring? No, I do not believe that we are going to go that and take that as a spring. Our spring did occur, and now we are in a back up perspective of it. We are going back up the trend. And look, another thing that I wanted to highlight, one more thing before I close off, is the price. Once we start seeing above, it starts breaking 41,000, and starts breaking through this resistance line, which is approximately 41, where there's a lot of interest in 41,000 and 42,000, and we've had that as a support. We've visited, we had it as a resistance one time. The price got pushed back down again, created as a support now. So we are going to see that again once we break through that, and we have a good follow through, not only just breaking through the resistance line and creating a support. We need to see a good follow through. That is when I say I can see that happening and being a sign of strength. And once we do that, 45,000, it's a really critical a level for Bitcoin to now see its all-time highs. And I also want you guys to keep in mind, it's not going to be like it's just going to go all the way to 60s or 160. We are going to go to that eventually, but it will take some time. Another thing that I'll be expecting to see happening is reaccumulation period. this thing being prolonged and taking much longer than it, a lot of people anticipating. We are in rush to get something. A lot of people are here to make profits. They are in a hurry to get and get their profits and call it a day. But that's not how the game is played. Things take time. And another one thing that I really want to bring it up was there was a talk about the moving average, us seeing a death cross, and now we are in a bear market, and the death cross is a good indication that we are going to be in this bear market for a long time. I really, I don't know. Totally, we have seen death crosses several times in the past, but we've also seen a golden cross that ensued right after the death cross, and it happened in several years ago. You can go back in time. I usually don't like using the simple moving average of 50 and a 200, even though that is what the majority use. Instead, I use the EMA cross, and if you look at the EMA cross, it has not touched it. It has not crossed yet. So I'm just going to zoom it out. It has not crossed it on my daily yet. So this is why I like using the EMA. It tells me better than a good indication than the simple moving average. And another reason why I will tell you simple moving average is not as what people think. Sometimes you could go wrong if you go to Instopedia and look at a simple moving average. This is where it tells you that the death cross has appeared so many times, and sometimes it proves itself to be a false indicator. So it is not guaranteed to be a bear market indication. It's just like any other indicator. You need to wait for a good confirmation before you put your money in. And so, like I said, I like using the EMA 250 crossing, and that one has not. It looks like it's about to. In 2017, the same thing happened. It looked like it was about to cross, but it never crossed. In 2013, the same thing happened. It looked like it was about to cross, but it never crossed. We had a really good bull cycle, and we are going to see that bull cycle again taking itself playing role, and we definitely are going to revisit all-time highs pretty soon. So many people are just tied up, getting tired, and taking their losses. You never sell it at a loss. You just huddle and wait for your time. Thanks for watching this YouTube, guys. This is my first video I've ever made. Um, I'll be trying to do some analysis here and there and be posting it. Let me know what you think of this video. Just put it down in your comments, and I appreciate it for your feedback. This is again, one more time, a pure analysis. It's my understanding of how I look at the market. It is not an investment. So this is not a financial advice. Thank you for watching.